Good morning again, traders. Today we're going to be going back into the SPY options. Today was a gap and go trade, which I did not play correctly because I chased the trade. So I want to talk about the importance of actually going through and planning out your trade. I somewhat planned it, but then I entered at the wrong time and I got demolished this morning. Gap and go trades are very hard to play. Basically, it's when you have a bearish candle the day before, and then it gaps up off the close, which you can see here. I've got a nice little doji forming on the daily chart here. And this is what happened here is basically the sellers that got trapped here yesterday that could not get out are basically getting out today. So we could see a continuation in the market reversal, or people could say, you know what, this is a good time to buy and expect it to go above this 286.63 mark. So we'll watch it over next week and see how it plays out. This is January 31st, 2018, day 2 of my $100 challenge. And I'm going to show you what I did wrong here and how I lost basically $30 after commission. So, as I mentioned, we have the bearish trade yesterday, gap up, and we basically have not been able to recover yet today. Now on a gap and go, is what I do is I go into a 1 minute chart. Bring this over, and we're going to zoom in. Okay, so this was our close yesterday on this bottom of this bar here yesterday. Zoom in a little bit so you can see better. Come over. So this is our close yesterday. We could see in the overnight, and like I said, I don't worry until after midnight. We have a high up here at 283.26. So I was expecting the market to at least go up to $283 on the open this morning, and it actually did and went up to the 283.26. But here's where I made the mistake. On the first 2 minutes of the candle on the open, you want to take your low and then your high on the second candle on your 2 minute, which would have been right there. So $282.90. Now, if you were going to buy this stock straight out, you would put it at $282.92. So you want to go 2 cents above to enter. So that's what I was going to do on the option. So we'll go to the option, and I showed you this yesterday. Go to trade, put in your SPY, and I wanted the 283 calls, which wow, they're down at 38 cents now, so I would have lost more actually. So I do the 283 calls for January 31, expiring today. I'm going to go to more info, pause charts, number 1. Okay. Wow, that's really gone down. So on this open candle here, my option would have been at 53 cents if I would have bought right at the open, but you can't do that. You want to wait for your first 2 minutes, get the low and then the high, and there's a reason for that. You want to do your high, you want to go 2 cents above to enter. So at 61 cents or 62 it looks like, I would have actually gotten it at 64. And then you want to set your stop loss at 2 cents below the low on the open candle. So at 53, so it'd be 51 cents. So put another mark here at 51. This is where I made the mistake. When I went into my option chain on E-Trade, I saw the price was already at 69 cents. So is what I did was I put in a buy stop order at 71 cents, way up here, because I thought it was going to be at the 69 cents, or I saw the price up to 69 cents. I had already missed the move, so I chased the trade. If I would have opened my options chain, this chart to begin with, I would have traded this a lot better, but I did not. I went based off of the SPY chart directly, and that's where I messed myself up at. So even at the 60, even if I got it at 71 cents, I would have probably gotten out when I noticed this bar close below the high at 77 cents. So $6 minus $10 on the commission, I would have lost $4. I could have lived with that. It would have been okay. But no, I set my stop loss at the. Actually, I went down below this candle. I actually set it at 46 cents. And that's another mistake I made on this trade. So price came down, price kept coming down. I was like, okay, it's going to hit down in this area at this little support area, and it'll probably come back up. Here we can see that it didn't. The 10 simple moving average passed over the 50 exponential moving average, and then we continued going down from there. I finally got out at 50 cents. I believe is where I got out at. Might have been 49. I did get out in here because the trade was just not going my way. And then I saw it kind of going back up, and I was like, oh, maybe we could re-enter, but I'm not going to chase the trade. I didn't plan that out, so I didn't go for it. And now we can see after 8:30 this morning, it's continued on another kind of slow area here, and then it's dropped even down more, down to 25 cents a share. So I got out before I lost $50, but I did lose $30 after commissions. So that puts our account, let's take a look at here. So I started with $100 in this account. It was actually $99, but yesterday's gain was like $24. Today's gain was actually a loss at negative $20 minus the 10 in commission, so minus $30. So that puts our account down to $92. Go back in here. So that's pretty much all I have for today. We will play this again tomorrow and see what kind of gap we get. Like I said, the trend reversal gaps are a lot easier to play. You can play those on the 5-minute, you wait for the retest, and then you can get in. And you can usually plan those trades out within 20 minutes or so. The gap and goes, you gotta be on that 1-minute chart, you gotta be quick. Like I said, I could have made a $3 profit or actually a $6 loss after commission, but you know, I chased the trade too much, and that was my mistake, and we look forward to not doing that again. Thanks for watching, and enjoy the rest of your day.